Is there more so in digital than it was in the old creative business?
Is there more what? Leveraging
Operating
margin?
operational leverage.
Probably a little. We were talking about it with an institution yesterday. I think when we add an account like Mondelez, Mondelez is this existing client, but we add in an area in the area of content, in the practice of content, or when we add BMW and Mini in Europe, we add. It's going to add each one is going to add more than 10% to our revenues, and we had 300 people. We're 3,200 people at the minute. We've hired in that number. There is a few of the hiring for BMW Mini, but we'll probably be about 35, 36, 3,700 in fairly short order, excluding deals, which will drive us over 4,000. So I would say, when we add an account like BMW Mini, we're adding people at pretty much the same rate. If within BMW Mini and Mondelez, we've already had out of scope. So in addition to the scope of the business we won, we've already added in a few weeks additional assignments. And in that's where you get the operational leverage. Your operational leverage is better when you do land and expand, which is win a project, add a project. I mean, you have to add people, but add a project, add a project, add a project. So our whoppers, or what we define a whopper as, our revenues are around about $400 million dollars. We're trending upwards, obviously, from that level. So a whopper to us is about 20 million, about 5% of our revenues. The biggest whopper we have is Google. Our second biggest is a major tech communications company. You can guess who it is. One of the most valuable companies in the world, but we can't say because of an NDA. A third and fourth will be BMW Mini and Mondelez. They'll be vying between one another, I think, and then the fifth is Facebook. So Facebook has come through land and expand, win a project, grow it. Apple's come through that. Google, to some extent, has come through deals, but has principally been driven by land and expand, and that's a much healthier way, I think. Big pitches, which Mondelez took 9 months, BMW Mini took a year and a week. I mean, these are great drains on our resources. For the bigger agencies, they've got more resources, but we're getting there. We're getting able to do it, but we very carefully assess the likelihood of us being involved, or winning before we get involved.
And when just on the operational leverage point, so if you just look at Omnicom's or WPP's margin, EBIT margin or operating margin for the last 20 years, it's almost perfectly consistent, whether that's good or bad, in terms of like 11 to 13% margin. So very little operational leverage.
Today, we were targeting 20% when I was at WPP. I think we got up to that in the heights of the 17, 18% level, and they're now targeting, I think in this plan today, they're talking about, was it 13 to 15, I think, as being, I think
that's the high end, right, for them.
Yeah. Well, I mean, it's not historically the case, but that's 15% seems to be, that's on net revenues. That seems to be gross profit. That seems to be where they're all sort of aiming for. I think that indicates to some extent a commoditized business. I think a quote unquote good professional services business should be doing 20% plus. And, at that level, you are clearly, if you win an account. I mean, there's one account that WPP actually won recently, where they basically offered guarantees on media, on $160 million of media, and they offered 120 days payment terms. Well, any mug can win pieces of business or keep pieces of business. They didn't win that; they kept it. Any mug can win or keep businesses if you offer those sort of trading terms. Finance and procurement do well in these sorts of environments. Particularly, I was talking to our friends in Australia, our companies in Australia just now, and they were saying, how 2020 was the year of the CFO, because the CFO managed to exercise tremendous control over what was going on. So So I think, I think you have to be, the margins I think should be 20 plus.
And you think S4 could get some more operational leverage historically than
Yeah,
from a higher base?
limited. If Peter Rademacher, our CFO, was on, he would say, there's 22, 23, 24%, that sort of, you could get depending on where the clients come from. And obviously, if you're doing deals, it depends on what the margins of the deal company is. I mean, it so happens, we're looking at the moment, and the margins are north of 20%, but we'll see at time. But I'm satisfied with 20, and I would sacrifice, margin, a little bit of margin over 20, 21, 22, a little bit of margin over those levels for top line growth.